Yahoo Finance is out with the third volume of the Yahoo Finance Chartbook. We've compiled more than 30 charts from economists and strategists across Wall Street, which offers insights into trends for both the economy and the markets. Joining us now is Yahoo Finance reporter Josh Schafer. And Josh, you're highlighting one chart that's taking a closer look at election cycles and the impact that they could potentially have on your portfolio.
Yeah, Allie. So this is a chart from Sam Rowe over at Ticker. He highlighted this from Charles Schwab strategists. And really the broad takeaway here is the benefit of staying invested and the power of compound interest. So what Sam is looking at here is the return of $10,000. This would be between 1961 and 2023, so about a 60-year time period. The return of $10,000 if you only invested under a Republican president would be $102,000. If you only invested under a Democratic president, the return would be $500,000. But see here, if you just stayed invested the entire time and you didn't try and play the game between whether you're invested under a Republican or Democratic president, your return would be $5.1 million. So the large takeaway here being that no matter who the president is, the long-term trend in markets has been higher. Perhaps just the lesson there of the power of what $10,000 can turn into in the stock market over the course of 60 years. And another note I wanted to add on presidential elections, this was something that came from Keith Lerner over at Truist. He took a look at the returns over the last 3 presidencies, both in the Obama administration, the Trump administration, and the Biden administration. We were looking at annualized returns for the S&P 500 somewhere in a 13 to 16% range. That's, of course, 2 different political parties there, and we're covering a pretty wide period of time. But again, the trend has been higher in markets. So largely the advice from strategists is to not involve your politics with how you're investing.